welcome to the Sunny Side of Finance podcast. There's a gazillion, bajillion podcasts out there that you could be tuning into. Happy that you chose to listen to me today. Hey, today we're going to talk about some definitions on a purchase contract. If you're in the middle of buying a home or if you purchased homes before and it wasn't really explained to you, today we're going to kind of outline some of the things on a contract that you really should be paying attention to, as well as some ways that you can tidy up your contract to make your offer a little bit more aggressive and maybe more favorable in the view of a multiple offer situation. Hi, my name's Singh. I'm your host. I've been a mortgage lender for 21 years. Last year, I decided to open up my own mortgage company. So awesome, right? We did that. So if you have a chance and you want to check out what rates are doing, or if you want to check out what we're doing, go to www.kees, KEES lending.com. And anytime, I'm really proud of this, at any time you can go check out a live rate without having to put any sensitive information in. All right, guys, so getting right into it. So buying a home is not like buying a car or buying a good at the store or a product at the store. You're going to be buying something that rivals the biggest purchase you've ever made in your life. In addition to that, you're going to have to insure it. And in addition to that, it could possibly grow in value. If it doesn't grow in value, you have for sure the potential to pay it down or pay it off and gain equity there. So really, a home is an investment, and it should be treated as such. And that investment starts at the time of acquisition, especially in today's day and age where there's a shortage of homes on the market due to everybody sitting on a 1 or a 2 or a 3% interest rate, having FOMO, fear of missing out, and not wanting to sell their home. So you have a very few and seldom listings coming out there. And then when you do, you have, even with rates the way they are, you have, in some cases, multiple offers on them. So how can you use the contract to help favor your offer and help you, have an edge against some of the other offers? First thing we're going to talk about is contingencies. Contingencies. If you've never heard this term, think of it like this. A contingency is a fancy schmancy way of saying back out period. Back out period. So when you go to purchase a home, this is what it really is going to look and feel like. Let's say you went with your realtor and you saw 9, 10 homes that you on a Saturday and a Sunday, and then on a Monday, you're like, you know what, that one house stuck out to me. I want to write an offer on it. Well, on your offer, on your 10-page or 13-page offer, it's going to say how much you're going to be willing to pay for the home. It's also going to say how quickly you're going to close on the home. Okay, so an example would be I saw a house for $399. I offered $409,000. So here's my offer, Mr. and Mrs. Seller. I'm willing to close of escrow, COE, close of escrow. I'm willing to close my escrow in 30 days. And, I'm going to need 14 days to do my inspections. So investigation of the home. So home inspection, roof inspection, pest inspection, pool inspection, right? And then I'm going to need 14 days to do an appraisal, which is also an inspection, but it's an inspection of the value of the home to make sure the collateral is actually worth what you're buying it for. Then there is the final one, which is the loan contingency. Hey, I'm going to need 21 days to get my loan done. So now that you're bored hearing that, let me really sum it up for you. I go to buy your house. So think of yourself as a seller. I go to buy your house and I say to you, hey, Mr. and Mrs. Seller, you're asking $399. I'll give you $409,000. I'm going to give you a $5,000 deposit or a $3,000 deposit. And I'll be right back. I'm going to leave here if you say yes, and I'm going to leave here and go to my bank who's pre-approved me, and I'm going to work with them to borrow the money that I'm going to need to buy your home. So I'll put $100,000 down, or I'll put $20,000 down, and I'm going to go borrow the rest of it. I'm going to put down $100,000. I'm going to borrow the $309,000 from whatever bank or brokerage that I'm borrowing from. I'll need 30 days to bring that money back to you. Do we have a deal? During this time frame, I'm also going to need 14 days. I'm going to need 2 weeks to get my inspections and my appraisal together. And I'm also need 21 days to make sure my loan officer at my bank, my lender at my bank, stamps me and says I'm good to go and the loan is guaranteed. So are we good to go? If you as a seller shake my hand, meaning sign the contract and we're inked, then it's official. What happens next is the escrow is open. We go to a local escrow title company and we say, hey, I'm a seller. Here's the property that I'm selling to this buyer. They play referee. They look at both of us to make sure there's no hanky-panky, that we're all playing above board. There's no fraud going on, okay? The buyer gives the deposit that they wrote on the contract to the escrow company within 3 days, unless it's otherwise said on the contract, 24 hours, but usually it's 3 days to give that deposit. That deposit is on the hook if I don't come through for the timeframes that I've quoted. So really think about that, right? Like, I'm the buyer. You've said yes to your home. It's a Monday. Before Wednesday, I need to give you $5,000 to the escrow company to hold for you as a deposit. So let's translate that to a car, right? You meet me on Facebook Marketplace. You want to buy my car and you say, I don't have the money yet for it, but here's $500. Can you hold it for me? Can you remove your marketing? Can you remove this listing from Facebook Marketplace so that no other buyers come? But here's my $500 to do so. So the seller is no longer marketing this home for sale. I am now given the $5,000 deposit. And now I have 14 days per the contract to get my inspections done, my appraisal done, and turn it into them and sign off my contingency, meaning I can no longer back out for those reasons. I have 21 days to sign off my contingency and say, hey, my loan's done. I can no longer back out for this period. If I've signed those contingencies and something falls apart, like my loan fails or I lose my job or something happens, the seller does reserve the right to keep that $5,000, that earnest money deposit. They can keep it. You can lose it. So this is why those contingency or back out periods are so important. So I told you guys that I'd give you a little bit of a tip on how to make your offer stand out against other offers. This isn't really like a pro bonus tip. Like, a lot of people know this already, but it's as simple as shortening your contingencies. What I just demonstrated to you with the 14-21-30, the 14-day investigations, the 21-day loan, the 30-day close of escrow, that is your standard contract in California. That is your standard. It's like the unsaid rule, right? Well, we're not in a standard market, are we? So what if you went to a lender? What if you went to a mortgage broker and they pre-underwrote you and they said, you know what, man? Your loan's good. Don't lose your job. Don't do any frivolous spending. Don't ruin your credit. Pay your bills on time, and your loan is good. You could remove your loan contingency. So now to the 3 contingencies, your loan's done. Let's say your real estate agent is a true consummate professional, and they're like, hey, you know what? I've ran the comparable sales. There is no way this house doesn't appraise. You have all these comparables that are worth more than the house you're buying. You're getting it, Mr. Singh, for $409,000, but you have this one that sold for $425,000. You have this one that sold for $450,000. You have this one that sold for $430,000. So $409,000 is a pretty good deal. I don't think we're going to have appraisal issues. Now, they're not an appraiser. They're not a certified licensed appraiser, but they give you the data and you make a conscientious decision to remove appraisal contingency because you know the value is going to be there. So now your loan's gone. Your appraisal's gone. That leaves you with 1 contingency: inspections, investigations. So let's say you start calling on Yelp or you start calling on Google, highly reviewed local home inspectors, local roof inspectors, or maybe there's an all-in-one service, okay, out there that works with different vendors. They have an all-in-one service, and they say for normal price it's $600, but if you pay us $800, we can get it done within 48 hours. And they can put you on schedule. So now you're writing this offer. You already know that you could put down a schedule. You're putting it on schedule. It didn't cost you anything. And you're saying to them, hey, I'm not going to give you a loan contingency. I'm not going to give you an appraisal contingency. And I'll do my investigations in 5 days or less. And I'll give you $409,000. Oh, by the way, my lender can close in 15 days. My lender can close in 12 days. Do you think that's going to help you stand out? Now let's talk about why standing out and doing the prep work and planning ahead can actually help you at time of acquisition. On that same house that's listed for $399, there are 5 offers. Let's say 3 offers. One is for $440,000, one is for $420,000, and yours is $409,000. The 440,000 needs 60 days to close. They have to sell their house first. The $420,000 offer doesn't need to sell a home, just needs 30 days. Their bank is slow, and they need 14 days for contingencies for investigations and 21 days for loan. And then there's yours at 409. No appraisal contingency, no loan contingency, and we'll have investigations done within 5 days. Yeah, it's $11,000 cheaper from the 420 offer, but if you were a seller, do you think that that's more of a sure shot to close? I mean, there's less risk. There's less backing out periods. Those have been waived. I think most of us agree that we would have gone with the 409 offer, left some money on the table because we have a sure shot and we're trying to sell something. We just want it sold so we can move on. I hope this video helps you a little bit. I hope there's at least one golden nugget you were able to take away from this podcast that I'm trying to do. If you find this of value and you find my real talk of value, if you find the fact that I'm not trying to sell no courses or sell anything, I'm just trying to throw free game out there, free information out there to help anybody, help everybody, then smash that subscribe button. I'm really trying to grow this channel. I know I'll never be a million, 2 million, 5 million follower, but that's okay. I'm a small town average Joe that, is just trying to continue to, spread the good word, just like it was spread to me. And that's how it changed my life. Real estate, selling homes, doing mortgages, helping people, being surrounded and understanding the world of finance has really given me an edge up in life. And I just want to pay it forward. It's one of my favorite movies, by the way, too. Watch that movie if you haven't yet had a chance. Hit that subscribe button. See you later.